Hi, Bill Burke here. I'm the Managing Director for Ground Rush Financial, and the purpose of these videos is to give you some talking points and ways to either approach business owners, approach individuals, open discussions, and hopefully move on to subsequent appointments and building your business. So today we're going to talk about the business owner. Now, I use this graph that you're going to see on the screen here because I do this, frankly, I did it by a yellow pad all the time, and now we're on our Zoom world, so you're probably going to have this prepared that you'll see. I had Darren redo this structure, but I want you to think about the business owner, because as you show this to the business owner, think about this. They are like anybody else that has income and expenses, but now they're going to be looking at things a little differently because they wear two hats. They are the business owner, and at the same time they are an individual, and this business is here for a purpose. It now provides their income. But what should you be able to look at and understand as you talk to a business owner so you both get on the same page? So let's talk about the business. It has income, and it has expenses, and then there's a profit. Now, the profit, without getting too detailed today, will either be spill out as part of a distribution from, let's say, an S Corp or a partnership, and that'll be taxed to the individual, or it'll stay inside a C corporation that has its own tax bracket. But the first thing to understand is there any free cash flow in that profit? When I say free cash flow, it means they get their profits, they've taken their W-2 compensation out, and before they take it out or buy other products or do other investments in their business, is there anything that they could afford to spend on their future? So is there like 10 or 15 or 20 or $100,000 a year available in that profit that we could allocate towards their future? So we're thinking about cash flow here. Now, once the money hits the tax funnel, you have after-tax money, and there's also a free cash flow there. So when a business owner has a profit, pays the tax, and that money stays in the business, well, what does it stay in there for? It's called retained earnings. Now, retained earnings will be cash. It can be equipment. It could be inventory. It might be receivables. It could be cash required for bonding. If you're in a construction company, you have to have a certain amount of liquid assets to bid on projects. There might be employee loans. So you might be, in fact, loaning money to an employee to pay taxes on a fringe benefit you just gave them. And then there's also other employee benefits. So there's your basic structure. Now the question is, how does money get out of that business? Well, you know the first expense is going to be W-2 compensation or a bonus, and that's taxable. The other expense is a 401k profit sharing plan that goes into that plan, and as you know, it's deferred, and then you pay tax on it when you pull it out. There is another expense that we can deduct from the company that goes into our Roth 7702, which could be our tax-free benefit later on down the road. Another expense would be something called an employee double bonus. That means we're going to pay the employee enough money so as he takes the money out, he has enough money to pay the taxes, so he ends up with a net tax-free benefit. So those are the things that start to fit in play, and when you look at the person's business, you're asking questions about where the key people come into play. Are there key people that allow this business to run? So if it's a proprietorship and you have one key owner, then this may or may not be really profitable. So when you're looking at a business and you walk in there, you've got to be careful you don't judge too soon. So I've worked with foundries, for example, that were making tons of money. They just did not look very good, bad part of town, but the owners are making $300,000 and $400,000 a year, and they have extra cash flow. And they want to help their employees. They just don't know how to do it. So the question is, do you set up bonuses, or is there a deferred compensation plan? And along the way, what you're also asking is, well, what makes your business so successful? Are there key employees that make this work? And remember, when you're dealing with a business owner, if they have employees, if they are generating business as a team, not just a sole proprietorship who's selling flowers or maybe has a restaurant, but they seem to they look well, their cars are looking well, it's a good company. The question is there some key people that are running that company for them? Is there an executive, or is there a sales director? Are there any children in the business? All this is coming into play because what you're looking at here is as this business owner is putting business into his business, he is allocating money for future projects. You're going to be looking at, does he need to buy a new big piece of equipment for construction, for example? Does he have to put away more money for employee benefits? The question I'm also looking at here on this business is also, well, what are we putting aside for the future? Because this business is here for a purpose. Is it going to be a major source of retirement income? Is he going to sell it to his employees? Is he going to have his children take it over? Does he want to sell it to a third party? And at this point, when you're talking to them, they really don't know. And this is where you fit in as the succession specialist and where you can bring me in to help you, is because this machine is growing, it's doing well, but it's doing well because of the team in place right now. How will that team operate in the future? And who will that team be? Will it be a key employee that we need to make sure is insured and incentive to stay there? We need to pick a special deferred compensation plan for him. Is it a child that we need to begin to give stock to? All these complications come into play, but by looking at this, you and the business owner looking at the same chart, you can begin to see, is there a profit? Is there extra money in that profit? After they pay the tax at the business level, they're leaving money in the company. Is there any extra money there for future fringe benefits? All that stuff is coming out in this conversation. So this chart has become very useful. We can all look at it. It's not too complicated. And then we can spin off from there into our next steps. So hopefully that helps you here.